You did the work. You found a stock with perfect fundamentals. You tracked the relative strength. You watched the volatility contract for weeks. You bought the breakout exactly right. And then the market opened. The stock dropped 3% on no news. Panic set in. You hit the sell button to protect your capital. 2 days later, that exact same stock rebounded, broke out of its base, and went on a 40% run. Without you. If this sounds familiar, you don't have a strategy problem. You have a psychology problem. You are letting the algorithm shake you out. Today, we are stripping the emotion out of the equation. By the end of this audio session, you will know exactly how to rewire your brain to survive market chop, ignore the intraday noise, and finally, let your positional trades ride for massive gains. Welcome to Catalyst Labs. Let's load the data. The greatest lie sold to retail traders is that you have to be doing something to be making money. In reality, the biggest money in the market isn't made by trading. It's made by sitting. When the market enters a choppy, rotational phase, your brain interprets the red on your screen as an immediate physical threat. The natural human instinct is flight. You want to close the position to make the anxiety stop. But professional growth investors know that chop is simply the market breathing. It is institutional money accumulating shares quietly, trying to bore the weak hands out of their positions. When you overtrade during these periods, you aren't protecting capital. You are dying by 1,000 cuts. The rule is simple. When the market is chopping, you must shrink your activity, not your conviction. So, how do we mechanically fix the urge to panic sell? We remove the decision-making process completely. We outsource our anxiety to the math. Enter the 50-day moving average. If you are holding a positional trade, looking for a 20, 30, or 50% gain, you cannot watch the 5-minute chart. The intraday chart is designed to lie to you. The 50-day moving average is the ultimate line in the sand for institutional support. When a stock pulls back, it will often undercut this line just enough to trigger retail stop losses before violently reversing higher. This is the shakeout. If your thesis is intact and the stock is hovering near that 50-day line on low volume, you must sit on your hands. You do not sell because you feel scared. You only sell if the math dictates it. If it closes below the line on heavy institutional distribution volume, then and only then do you execute your stop. No emotion, just data. Now, I want to talk about the most dangerous place on a stock chart, the right side of the base. As price tightens and volume dries up, as the volatility contraction pattern forms, the stock becomes incredibly quiet. This silence drives amateur traders crazy. They get bored. They sell a perfectly good setup to chase a stock that is already up 10% on the day. This is exactly what the institutions want you to do. The extreme quiet before a breakout is the final test of your psychology. The tightest price action always precedes the most explosive moves. To capture super performance, you have to be willing to endure the boredom. You have to train your mind to view low volume and tight price action not as a lack of momentum, but as coiled spring energy. Holding a winning trade is entirely unnatural. Human beings are wired to take small, quick profits to secure a quick dopamine hit and hold on to massive losses hoping they bounce back. To win, you must invert your own biology. You must become comfortable with the discomfort of being in the green. You must allow a stock room to fluctuate. You have to give up the need to be right every single day in exchange for being massively right over the span of a trend. Stop staring at your P&L. Start staring at the trend. Surviving the chop isn't about having a better indicator. It's about having a better mind. If this session recalibrated your mindset today, hit the like button. Let the algorithm know you are focused on real growth, not gambling. This is Catalyst Labs. Keep your risk managed and let your winners run. End of session.